All right, what in the world is happening to the housing market? Between talk of portable mortgages and Fannie Mae dropping minimum credit score requirements, there's a lot flying around. Today, I'm breaking down what's real, what matters, and how this could actually affect you if you're buying or selling in the next year. If you've been watching rates, inventory, or affordability, you already know we're in a strange moment. But the next few months could bring some major shifts, starting with two things: portable mortgages, the removal of Fannie Mae's minimum credit score requirement. Let's start with the one that's already official. Beginning November 16th, Fannie Mae will no longer require buyers to have a minimum credit score of 620 to qualify for a mortgage. That doesn't mean anyone can walk in and get a loan. Lenders still have their own guidelines. But this change is aimed at people with thin credit histories, folks who pay their rent, utilities, and other bills on time, but don't have enough traditional credit data to generate a full score. Instead of looking only at traditional credit, lenders will be able to consider rent payment history, utility payments, other recurring payments that show consistent financial responsibility. The goal is to expand access without repeating risky practices of the past. And just to be clear, this is nothing like the Wild West lending we saw heading into 2008. Borrowers still have to qualify under the full underwriting process. There are no income, no job loans happening here. Now, let's talk about the rumor that's turning heads: portable mortgages. A portable mortgage would allow you to take your current low mortgage rate and transfer it to your next home. So if you refinanced at 2.8% during the pandemic, you'd be able to keep that rate when you move. This idea is meant to solve a major problem. Millions of homeowners are locked into their homes because their current rate is too good to give up. If mortgages were portable, sellers might finally feel comfortable listing. Inventory could increase, buyers would have more options. But here's the catch. There's a reason this isn't already a thing in the US. When banks loaned out money at 2 to 3%, they expected those loans to last decades. If everyone suddenly moved and took those rates with them, lenders and investors would take massive losses. So for portable mortgages to work here, we'd need heavy regulation or some kind of government-backed system, similar to how Canada does it. Even then, Canada's version has its own issues, including higher rates overall. So yes, mortgage portability could help buyers and sellers, but it could also push interest rates higher for everyone to offset the risk. This is why many experts are skeptical that true portability will happen without major policy changes. With all these changes, some people are nervous we're heading toward another 2008 style meltdown. Let's clear that up. The lending environment today is very different. Buyers actually have to qualify. Debt levels are stable thanks to fixed rate loans. We don't have the same speculative lending or runaway investor activity we saw back then. That doesn't mean there won't be challenges, but the core of the market is much healthier than it was pre-crisis. So to wrap it up, credit score requirements are loosening, but underwriting is still strict. Portable mortgages could change everything if they ever become a real policy. The market today isn't 2008, but it is evolving fast. If you want updates as these changes roll out, or you want to talk through what this means for your buying or selling plans here in Denver, drop a comment or reach out. I'm keeping a close eye on all of this. Thanks for watching, and I'll see you in the next one.